Hi there. Let me show you something very interesting about Tilray Brands, a cannabis company. As you've probably seen, the stock price has gone up quite a lot in just a few days, more than 40%. This is amazing. And if you look at this industry, the cannabis industry, you can see that this industry, the global cannabis market, was valued at 43 billion in 2022 and is expected to grow from 57 billion in 2023 to over 444 billion by 2030. This is an amazing growth rate. As you can see here, a compound annual growth rate of over 44%. And North America dominated the global market with a share of 81% in 2022. So this company, Tilray, has quite good tailwinds from this industry, the cannabis industry. As you've seen, it is expected to grow a lot. Now, this company is not my investment idea. A viewer told me to analyze this company. Please cover Tilray. They are going to be the leaders in the cannabis sector. And there are hundreds of catalysts this year alone. And he's saying that now cannabis is actually taking a huge step. This might happen as they have good tailwinds from this industry. An annual growth rate over 40%. And as you can see, the stock price went up 40% in just a few days. That's amazing. And the market cap, as you can see, is quite small, about 1.7 billion. So, as the market size is expected to be over 400 billion by 2030, and if you look at the market cap, at this small market cap of only 1.7 billion, their upside is quite huge. More than 10x or even more. But when there is high reward, there is also risk. That's why you have to be very careful if you decide to invest in this company. Because your upside can be more than 10x or even more. But don't forget that everything depends on their future profits. If this company can grow its earnings more in the future to deliver, let's say, 1 billion in profits, then your upside can be more than 10x. That can also happen. But if you look at their past performance, you can see that the stock price has done nothing in the last 5 years. A decline over 96%. And I will explain you later why this happened. So, you can see that this company has some ups and downs. People expect that this cannabis industry will take off. These ups and downs may happen again. You may see another bump in the stock price to have an increase over 200% or even more, as it happened in 2018. An increase of over 500%. Because, as you've seen, they have good tailwinds from this industry, an annual growth rate over 44%. Plus, if you look on their website, you can see that they have access to more markets around the world, global reach, in North America, Canada, United States, South America, Europe, Australia, New Zealand, and other countries. So they have access to a huge market. And if they can gain more market share, then their size can go up quite a lot. As I said, your return may be quite high. But now let's also look at the risk, because you've seen the reward. You can more than 10x your money quite easily. If this company becomes profitable, of course. But don't forget the risk. This is the most important. You don't want to buy the current price and have a decline like this, over 90% in the next 5 years. You want to have an increase like this, over 400%. That's the aim. That's your goal. So let's look at the risk. If you look at their assets, you can see that they have some cash of about 250 million in cash. That's good. But you also have to be aware of their debt, which is around 400 million. So if you subtract their cash from their debt, your net debt would be around 150 million. So you can't rely on their assets, even if you see their total assets about 4.3 billion. Forget about these assets. What matters is their future profits. If the revenue grows more in the future and if they can become profitable. Because as you can see, Tilray currently is making no money. They have no profits. For the last quarter, the second quarter of 2023, they had a loss of 46 million. And compared to the same quarter from 2022, their loss was about 61 million. So this is an improvement. They have decreased their losses from 61 million to 46 million. This is a good sign. And also the revenue, as you can see, has increased from 144 million to over 190 million. So this is good. But don't forget, what matters at the end is their final profits. So, for the moment, Tilray has no profits. You have to be aware of this. You can also look at the results for the last 6 months. Same thing. Revenue went up a little from almost 300 million to over 370 million, but their losses were over 100 million. So you have to be aware of this company because they have good tailwinds. Yes, they can grow a lot in the future by 30% a year, an annual growth rate. But if they don't become profitable, if they don't deliver some profits, then the stock price will move up. Of course, in the short term, you might see some ups and downs, those bumps. And you can make some money if you know to buy at the right time and sell also at the right time. You can make some money easily. Forex, quite easily. But you have to predict the market. And I think not many of you can do that. Only by luck. So, what matters is their future profits. And now, as you can see, their trend is that they keep reducing their losses for the last quarter and for the last 6 months. This is good. Now, if you zoom out and look at their past performance, at their revenue, annual revenue and annual earnings, you can see that the revenue has increased from 180 million from 2019 to over 600 million in 2023. But compared to the last year, 2022, their growth rate wasn't that high. As you can see, from 628 million to 627 million. And their losses were about 1.4 billion for 2023. And for 2022, a loss of almost 500 million. Same for 2021, 2020, and 2019. So they had only losses so far. But if they can increase this revenue more in the future, let's say from 600 million to over 1 billion, because as you've seen their latest results, the revenue went up. If they can keep growing, increase this revenue, they might become profitable. And if that happens, if Tilray becomes profitable, the stock price will rebound. It might go up, as I said, 10x, as they have great tailwinds from this industry, cannabis industry. But if they don't become profitable and they keep reporting more losses in the future, then you know the answer. This company won't do great in the future. I mean, your investment. The company might survive. They can take on more debt or issue more shares, and they can survive. But you as an investor, your investment won't do great. That's why you have to be very aware of this risk. Because they currently are making no profits. And you don't know for sure if they're able to make some profits. Because as you can see, the gross margins are not that great. The revenue was about 193 million and the cost of goods was 146 million. And on top of that, you add operating expenses, general and administrative, and other expenses. And at the end, your operating loss of 41 million. So it's a risky bet. You have to be aware of this first risk. The second risk, as I said at the beginning, is their debt, especially if they take on more debt. And if they don't become profitable, then this debt will become a problem. Because if they don't have any profits, and as you can see, their interest expense, their interest they have to pay on their debt, keeps going up. It has increased from 3 million to more than 8 million in the last quarter. So you have to be aware of their losses, if they can improve, and also on their debt. If they take on more debt, then this will become a second risk for you. And the third risk is, let me show you something quite nice. Bad for investors. But as you can see here in this image, is the number of shares. In 2020, so as you can see down here, in 2020, this company, Tilray Brands, had about 100 million in shares. Their shares outstanding. 100 million. They were 100 million. And now they have, look at this performance. 700 million. More than 700 million in shares. So you can see a 7x in the number of shares. And that's why the stock price has declined so much, especially from its peak. Over 98%. Because they issued a lot of shares. When the stock price was up quite a lot, they took advantage. They issued more shares to raise more money so that they can fund their business, their operations. This is good for the company, the management. They get higher wages, higher compensations. But for investors, especially investors who bought at the highest peak when the stock price was about $146, their investment return was quite bad. And you don't want this. That's why I'm here to help you, to avoid those misleading companies that attract investors to invest quite at the highest peak, and then they suffer. And you don't want to get in this trap. That's why, if you are serious about investing and you need my help, then you can join my research platform. You can send me an email or see the video description. And there you'll find more. How I analyze businesses, where I have a margin of safety, and are profitable. Profitable companies. They can grow their earnings more in the future, and so your investment. But if you invest in risky investments, such as this company, then you might have a nice return over 400%, but your risk is quite high. Then you can have another decline of 92%. So with those companies, more about luck than investing. That's why you have to be very careful and pay close attention to the risk. Especially this huge dilution. It's over 7x in the last 4 years. That's quite amazing. As I said, this is the risk. It's up to you if you want to focus on the risk first or only on the reward. As you can see, a compound annual growth rate over 44%. And the stock price might go up 10x from the current level if this company becomes profitable. So it's up to you if you want to take this risk, and maybe the stock price will rebound, will go up 10x. So that's it for this video, and if you have other questions or if you want me to analyze something new, please let me know in the comments.